What is good, everybody? Welcome back to your favorite crypto trading channel, where today we're talking about three important things you need to know to keep track of the market. 1. Volume. 2. Volatility. And 3. Momentum. All three of these features of every single chart out there is important at indicating you how strong a move is going to be, what type of trend is it going to be, is a reversal going to happen, is a correction pattern going to happen, and generally where the market is going to go, right? That's our goal. To see where the market is going to go and to try to predict the future, basically based on all of these candles, or as my younger sister likes to call them, squiggly lines on each chart. Okay, so I'm going to talk about Bitcoin's chart right now and show you a few examples of higher, lower, and medium type volatility in the market, and explain to you what you can expect in the future. Now, first and foremost, one very important thing about volume in the market is the following. On Saturdays and on Sundays, there is low volume in the market, right? So that's Bitcoin, and also the Forex market is closed during the weekend. So is the stock market, which means that volume will be very low on Saturdays and Sundays. Monday through Friday, volume is good. News events such as NFP, CPI news, and basically anything red that you can find on forexfactory.com. I've showed you this multiple times. So for example, this one, news by NZD coming out tomorrow on a Monday, is red, so there might be some further volatility introduced into the New Zealand dollar. Japan has a bank holiday, and Britain has a bank holiday as well, which means that there will be lower volatility in general in the entire Forex market tomorrow. How does that depend on crypto? Well, if banks are closed in the UK, it's definitely an amount of crypto that will not be traded tomorrow. That usually is, so we could expect some lower volatility even though we have this NZD news. Now, another important thing you need to know is that candles can determine very simply what is high volatility and what brings low volatility. So let's take a look at Bitcoin ever since we started falling from this top, or just more recent times in general, right? So every time we see a spike in volatility, so a huge red candle, right? This was the first example right here. We have a big red candle, and what happened after that? The move simply continued towards the downside, right? So that's one explanation and one example of how a high volatility, high momentum, and high volume candle moved the market, right? Everything just simply moved down. If you move on to the lower time frames, you will notice one very important thing, which is that even on the lower time frames, this candle was a big one. On the 4-hour time frame, huge candle. On the 1-hour time frame, well, let's zoom out. It's also a bunch of huge candles. Now, why did this happen? Well, it happened because of news in the market, right? News pushed the candles down. We found volume on the hourly time frame, which then extended onto volume on the 4-hour time frame, which then extended onto volume on the hourly target time frame, increasing momentum and basically pushing the market down. Now, let's see a few other examples of what happens when momentum is low and there's no volume in the market. So what's happening in these times is a consolidation within the market. So as you can see, after this big move, we had a big rejection wick from the bottom, which then induced the market into sort of a clumsy state. So we were just moving like this for most of the time, right? It's like a heartbeat or whatever. And that basically means that there is not a lot of volume in the market to push out on the upside, right? So to break out of this pattern on the upside and potentially cause a reversal, or to break out on the downside and potentially cause a movement, further down. And what happened was we found an increase in volume. Once again, a big red candle closing below this correction pattern. What does that show you? Well, it shows you that momentum is picking up. The volume is strong enough that we can exit this large correction pattern, which was trapping the price for some time. And finally, we can break out and keep moving. And what happens? Well, the market just moved further down. Now, currently, what we are seeing is, in general on Bitcoin's chart, a low volume, a low momentum. We did have a news event very recently, CPI news, that caused a big red candle, but we also did have a liquidity grab right before, so we're not really saying much about the market at this point. It's basically consolidating after a huge bearish move that's been happening for quite some time. So this is the bearish move, right? This is the correction pattern, and it is very likely that we continue moving down. Now let me explain why. So every time there's a correction pattern such as this one or this one, I like to take the minimum price objective as the target of where the candle or the pattern could lead to in the future. So if we take this as a target, this whole bearish move, let's say since the initial big burst of downwards volume, since basically the whole market started knowing that it's going to start to go down, well, you could take this and just very simply move it to where the candle or correction pattern was actually broken out of, or here or whatever, right? And what you can see is that it coincides directly with the 10k level. This is called the MPO of this correction pattern, or the minimum price objective. So if we do see a strong break, which we did, basically we already broke out of this correction pattern. Now it's only a question of time. When the price keeps moving more down, well, it's likely going to move down into the 10k mark. So what I was saying about the 10k mark is not just a random prediction. It is something based on an MPO, a concept that I've seen before and implemented before, and it has worked a lot of times. So that's it about volume, volatility, and momentum. If you enjoyed it, please leave a like and subscribe to the channel. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the crypto or blockchain world. So thanks for watching, and I'll see you all in the next one.